Good day, everybody. It's Greg Schnell. I am here with the Canadian edition of Market Review. Thanks for taking the time to join me. Coming off here on Sunday, July the 7th. Calgary Stampede is underway. Half of the year is gone. The Raptors have lost Kawhi. We got a whole bunch of news in the markets, except our markets haven't really broken out yet. So we're going to cover that off and get into some other trade ideas, perhaps. To find my blog, StockCharts.com, go to the articles tab, and you can look on the drop-down menu and find the Canadian Technician. Don't ignore this chart or chart watchers. And please hit subscribe at the bottom if you're interested in getting those in your email. We don't send them out for anything else. No other marketing or other pressure put on you based on that email. You can always email me at gregs@stockcharts.com, Twitter at Schnell Investor. And for the agenda today, the TSX is trying to break out. It just hasn't quite yet. The US obviously has. US is testing 3,000. The financials look good here. The setup is just about right. Any sort of move in the yields, and I think these financials might be able to kick it up. So we're going to talk about that. The US dollar had a big swing this week and really put pressure on a lot of the commodity related trades that were starting to set up, including emerging markets. If that was a whipsaw and it's going to start cranking up the US dollar, we have a whole different setup coming from what looked like 2 weeks ago. So really a big deal. Oil and gold are on hold until we figure out that dollar. Canadian charts with nice setups. I want to go through quite a few. I probably got 40 or 50 that look great and are interesting here. Not many in the oils, not many in the gold, so I've just backed off of those until I get something. But these are other ones just kind of in the marketplace that are interesting to look at, so I hope you'll enjoy those. Let's jump into the charts. Okay, first of all, this is my McClellan oscillator chart, and on the top here is the summation index. And what you see is this is bouncing up. It's beautiful, no real problems here. It did swing down here in May, and that was that dip we got. But looking down here, here's the TSX, and we're just continuing to struggle around this 16.5 level. If we can kind of get through there, that would help. Now, we're slightly above it on the close on Friday. The one thing I will say is the advanced decline line is getting ready to break. We have had no break yet on the net new highs. And the problem with that is you can see back here in 2015, we keep getting stuck at this low level. And until we can start to rally, that's a problem. I will say that the US on both the NASDAQ and on the New York Composite have both started to rally, which makes me much more excited that something good is going to happen here. And again, the breadth is set up in the US that things are looking good. So with that as a backdrop, I think we have to be bullish, and things are looking good. As you can see, the TSX is up again on the week, making a higher high than last week, and we're still trying to get through that April high. But again, we're going sideways here. We don't have a lot of bullish percent index on Canada, but I think part of the reason for that is the oils are still held up. Now, the golds have all made a nice push, but the oils are still a struggle. So here is the percentage of stocks above the 50-day moving average, and you can see we're up around 66%. And here we're up around 65% of the stocks are above their 200. So that's plenty bullish. We have lots of breadth. And the one thing to start noticing is we're starting to get this breakout. Now, this breakout doesn't back here in April, you can see that was a pretty nice location. Not here so much in November, started to rally, and then what did it do? It plummeted. This ratio is the percentage of stocks above the 50 versus the 200. And we had been sitting down here in this base and have now started to push higher. So I'd like to see that actually pop through. And what this ratio tells us is when the stocks are starting to break out, the stocks will move above the 50-day moving average before they move above the 200, and that's because it was down sloping. And so as that starts to turn, the percentage of stocks above the 50 go above the percentage of stocks above the 200, and so we get this ratio goes positive. And that's really what we need. Now, in this particular case here, the market didn't pull back a whole bunch, like the 50 was still above the 200. So we didn't get the same sort of signal we would get coming off of a bigger pullback. Now, all that to say, it's still just fine. The market is still holding up. We're up near the highs until we start breaking. Well, now I think we've got a little floor test here at 16,250 to watch for. The market has been rallying on the back of Fed news, assuming the Fed was going to move in July. The problem with the recent information that we got out of the jobs market was that that might not happen. So this stresses the market a little bit. Now, if the Fed can slowly roll that into September through a few cautiously emitted statements from different Fed leaders over the next month, we should be fine. But again, everybody was starting to price the Fed move in. And if this US dollar starts to yank higher, that's going to put a lot of pressure on the rest of the world again. We don't have any settlement on the China trade. We don't have any settlement on the European trade. Both of those are big elephants in the room. So the market's been going up really on the news that something would get done on that trade front, and we don't have that. So the S&P, while trying to get through that 3,000 level, that'll be a big one for us, and we'll keep our eye on that. For Canada, the high-low index, that's here in the middle. This is using a moving average, and it's not that robust. Like, I'd like to see it with a little more froth and volume, some excitement to it. But basically, at our peak here, we have 20 more stocks making highs than lows. So pretty uncomfortable and not really great. And so when you use the cumulative line, we're kind of flat. So that's not that enticing. This is the advanced decline line. The other was the high lows. And what we see is the TSX right up here pounding this 16.5 level, but no real sort of momentum lately that would be kind of worthy of some sort of big rally. But you can see in here, we've been having this sort of rally for a while, and so the market can trend up on that. It can also trend sideways on the same sort of level. So not very clear. What we'd like to see here is this advanced decline line start to push to new highs and get going, and that would probably confirm our breakout. So if we can get that, that would help a lot. Okay, in the U.S., here's the New York Stock Exchange high lows, and it's this break that we finally got. So kind of the level we've been stuck under for the last year and a half, we've actually broken out to the top side, and that's quite bullish. I've done it also for the S&P 500. What's the percentage of highs over lows? And what you can see is, it's a strong index. So they're up near the top, and we're breaking out here. We held the breakout this week. That's bullish, and we should be all thinking about higher ground. Should it roll over and stall, we fall back below 29.50. That would be a bigger deal, but right now, a person has to assume bullish assumptions. When you're hitting new highs, it's bullish. Canadian dollar, we're trying to get up here, get above this 65-week moving average. It's been friction for a year. We spent 2 weeks above it, but with no real thrust lately. The PPO has actually turned up and got to zero. This would be a nice place. Now, again, we had a little bit of rough weather from the US dollar that I'll show you in a second. The TSX composite, the PPO looks like it wants to start to break out here. So this is quite bullish. And any sort of a breakout, I think, in momentum to the high side. So again, we've been down near zero for the last 2 months. If we could get something going to the high side, that would really help. I like Canada as a leader to the U.S. It's going to start to fail before the U.S. market fails. So always keep watching the Canadian market from a perspective that if it can't get going, we probably have weaker conditions on the U.S. side coming, and it could be 2 weeks, 2 months, but it just tells us that overall we're starting to slip. So the Canadian market, I think, is going to be an important gauge here, but if the financials start to run, so bond yields bottom, start to rise, the pressure on the yield curve starts to improve, and then with that, maybe we get a run in the bank stocks because they're all set up to try and break out to new highs. I've been covering that off on the US side all week, so you can catch the US market review, the Friday market buzz, and my Don't Ignore This Chart article on the weekend. All of those lean towards the financial sector and talk about how they could break out in the US. Here's the US dollar, and look at this stiff move this week, straight up. And again, we got right back down near support, and now we're back through this 40-week moving average, and we're stuck under the 10-week moving average. We're right in the middle of the zone. I also like to use the 65-week moving average sometimes on the currencies. The bottom line is if I just change this 40 to 65, the point would be that was kind of more where we tested. Now we want to just see if we can get back through. But if we get back through here, this is quite bullish and obviously inflammatory. If this is going to start to bounce near zero and take back off to the upside, that would be big and it would put a lot of pressure on the rest of the world. So my bullish thesis for the rest of the world, where if this was going to start to drop, the emerging markets could start to rise up, that would kick in. So this is a pretty big watch on the currencies this week. Our good friends in Japan have pretty much had a big reversal here and are dropping down, and they tested new 4-week, 5-week lows. Didn't close on the lows, but it was one of the lowest closes in 3 or 4 weeks, so that's not good. And again, the gold trade follows this trade, or the two trades work together, so when we're starting to see that reversal, that would be a bigger problem. Looking in on the Australia dollar, it's trying to break to the upside. So that's what keeps giving me conviction that we'll have something going on. The Australia stock market is breaking out to new highs. Brazil is breaking out to new highs. Russia is breaking out to new highs. Canada is not. So that's really frustrating. What I want to see out of this currency, if it can start to move, that probably suggests commodities are going to keep soaring. Okay, euro, an absolute reversal here. So up, made new, whatever, 2-month highs, got up and then reversed. And now this week falling hard. Notice where the PPO is. It's still below zero. If this rolls over below zero, that's a pretty bearish outcome. And I'd be worried about a relatively quick move down, especially after it's been jogging sideways for so long. So keep your eye on the euro. It's not obvious which way it's going to go, but I think there's a lot of information there. Okay, so here's the Canadian marketplace, and you see we haven't quite broken through new highs. We have this downtrend in momentum. Now, the Australia market has broken through that. That's a beautiful thing, and makes me very, very bullish that Canada is going to start to turn up. So we haven't seen that yet, so that's one of the things that concerns me. Here's the TSX Composite, and you can see the momentum is flat going all the way through end of May to early July. And we're sitting here trying to work through this this prior high. We have support at 50, and then what we want to do, what we'd like to do is have a big bull market rally. We got up near 70, so we could draw a green line under here and say we're in a bull market until we're not. Obviously, we'd like to get back through this 65 level. That would be pretty important. But any sort of positive move here from the banks, and I think they take off. So TSX is heavily weighted to the banks or the financial sector, so that would be a big improvement. No real news on that chart. Okay, this chart's got a whole bunch of ratios, but it's not telling us anything this week, so we're going to scroll on so we can get to more important stuff. Here's the S&P 500, and as you can see, all of a sudden on this huge US dollar surge, we didn't get any real result from the S&P 500. It basically traded tight in a range and didn't give up much. So while it tested lower than the prior day, it's still very much in an uptrend. And it's this US dollar that's the big question, because now it's broken the downtrend line. It's still in the broad middle of the range. So we don't have a direction, and that makes it more difficult. Okay, S&P 500 again breaking out to new highs. NASDAQ's trying to break out to new highs, did so on Thursday, closed just slightly lower on Friday, but still up in the top right-hand corner of the chart. Commodities, let's get into that. Okay, so here we go. So we've got a downsloping trend line here on momentum. We now have a positive cross on the PPO. That would be bullish. The big issue here is we're still below 50 on the full stochastic, and if this was to roll over, that would be problematic. And the second component of that is we closed essentially flat on the week. So we didn't gain anything, and we're stuck under this 40-week moving average, and as we all know, that would be important to get through. So that's what we're watching for in the week coming up, starting the 8th of July. Working through the different sectors, here's the technology sector in Canada, just straight up and to the right. I mean, Shopify's been an absolute monster, but we've had some other good ones start to step up as well. PPO is rolling over a little bit here. Just kind of suggests watching it. You know, when we got the rollover back here, it was important for about a 6-month slide, and when we got the rollover in March, It was only down for a month, but we've been going up for quite a while, but we're starting to see longer and wider bars, which suggest a little bit of instability up here at this level. Perhaps we need to consolidate a bit more. On a relative strength scale, the Canadian IT sector still outperforming the S&P 500, and we have a nice upsloping trend line. So on a daily basis, all looks good. This is the actual ETF that trades that, and what I'd be watching for here is this relative strength line in purple to break down. If that starts to fail, that was a pretty good warning back here in July of 2018. If that starts to happen again, let's be cautious. The one chart that I didn't like this week was the semiconductor index. And the reason is because we were up near prior highs and we got rejected and we spent all week going lower. Now we're just getting back down to this, call it 110 level, 108 level. And what we want to watch for here is, can it bounce and start to go higher again? But it's at a little bit of an iffy spot. So from a technology perspective, that's one thing to watch. Okay, getting into crude. Crude had this huge down hammer to start the week. And then Wednesday and Friday, we didn't really get much of a move with July 4th. So we're kind of hanging in there. Now we're watching for Monday. But again, you can see that we stalled at the 200 and at the 50. 50 is now below 200. That's usually what we call the death cross or the bear market signal, where when the 50 is trading below the 200, be very, very cautious. And we have flat momentum for the last 2 weeks here on a daily chart. So we really undecided on the direction of oil, but if it's going to keep breaking lower, that would be a big deal. Looking at energy, what we have for the energy sector is, we're trying to hold these 2016, 2018 lows. Keep dripping a little bit lower. The wave here is dipping below zero and is now starting to turn back up. So I think the bigger issue for us in Canada is waiting for this to actually finish turning. We're not ready. It doesn't seem like it's ready to start breaking out. Normally during Stampede, I actually like to watch the oils for a possible turn higher, but just with the recent pressure on pipelines, it's been difficult to get oil to market, so the markets haven't responded to crude oil as well as they normally might have. Here's the energy sector, and we're still underperforming the S&P 500. Trying to make a higher low here. If this started to bounce up, I think that would be a better place to get on board, and we might actually make some price gains in those stocks. XEG, the ETF for the Canadian energy sector, doesn't look that bullish to me, living in the bottom right-hand corner, and doesn't look like an uptrend is starting yet. Again, it's this momentum wave down here in the bottom that gives us some early hope that might be improving, but until it starts to turn up again, we need to see that finalize. Here are the Canadian financials, and one of the things I want to watch for here is a break of this downsloping trend line, and you can see on Friday we closed pretty much right on it. Any sort of a pop on Monday, and I think I want to participate in that to the upside. This would be a higher low and turning up above zero. That's a very bullish place to get on board, kind of like in middle of 2016. And it would be the same thing as the bond yields, and maybe I should just go get that. Dollar TNX. What we saw in the Treasury yield back in, here's our 5-year, was the stock market bottomed in 2016 in January, February, and then rallied on. And then it took the bonds a few more months, and it was early July that they bottomed. Well, where are we now? We're early July. We've been rallying for about 6 months out of the hole. If this is going to start to take on this banking sector, and you're about to start getting this big early move, kind of from this early July period from here to here, I think we'd all want to be on board with that. So in this case, roughly at 25% move, maybe a 30% move higher, 225 to 300. That's pretty big. And I think, again, we're set up for it where we rallied up, pulled back, and now look like we're getting set up to take off to the upside. Really like the setup here. If it's going to start to take off, I think you want to enjoy the ride. BMO. These are all our Canadian banks, perf charts going back to the beginning of 2018. We can move it up to 2017, but I think the most important thing to watch for here is all of these, the big five, are grouped near the top. And then here this is Scotiabank, which is a lot more weighting towards emerging markets. So this must be National Bank up in here. Or is it the S&P? It's the S&P. So Scotiabank is down here, hasn't really done that well for over a year. CIBC hasn't done that well for over a year. This is Laurentian Bank, and it looks like it's starting to build a base on this brown area here. So any breakout there might be encouraging. And Canadian Western Bank looks like it's just sitting in the bottom here. So Canadian Western Bank moves quite aggressively both ways. So if there was going to start to be a turn up in the banks, that might help. It's still got the weight of the oil sector behind it. So that's a bit of a hurdle. Now we can change this to 2019. Done might be a little more important to look at, just kind of what the recent returns are. And you can see here, I think this brown line is BMO and the orange line is Royal Bank down in here, TD in the green. So we're starting to get some nice movement, and National Bank in the blue. So these are all up 15 to 20%. Pretty nice gains. Oh, actually, that brown one is Laurentian Bank. And so, again, from a pretty ugly base, it's actually started to work its way higher. And we can see that Canadian Western Bank is right in the middle here, and it could pop to the upside. So I'm starting to like the banks here. And again, I think I've demonstrated why. Hopefully, there's some trade ideas for you there. If the US dollar isn't going to work out, I think this emerging market trade actually rolls back over, and I would expect Scotiabank to roll with it, Scotiabank being in red. Canadian financials on a daily chart, you can just see wandering up here. Momentum's right near zero. So if it starts to break out to the upside, that's a great place to get on board. If we were to annotate this, we would draw a simple little trend line down here. And what we'd like to see is that get broken to the upside. And if that starts to break out right near zero, that gives us lots of thrust. Great place to be on board. So I would be happy to look in on those types of stocks. I think that could be where one of the bigger opportunities sits. This is the XFN Financial. If you want to play it, here's $37.85, $38, just above this $38 level. So we broke out, pulled back, and now it looks like we're trying to break out again. If that happens, I think that's just bullish, and you want to be on board. Okay, here's the 10-year note yield, and I will say on this, if we just look in the last couple of weeks here, we've had a hammer candle here and a hammer candle here, very bullish. If these can start to break out to the upside, I think that would be the reversal signal we're looking for, even if it rallies up to the 200-day moving average, which is falling quickly, or the 40-week. If this is going to fall, this still has 10 or 20% it can move up. The yield's up, bonds down. I think that should be a bit of a kicker for the financials. Okay, healthcare. Again, buried in this one is Bosch Healthcare, and then we have a bunch of smaller medical marijuana companies, and then we also have a little bit of biotech, pharmaceutical kind of stuff. So it's an all-encompassing basket. The big thing to notice here is the 200 day or 40-week moving average has rolled over now, and it's starting to underperform. And it's also, this whole group is somewhat underperforming the the TSX. So as this is working through, digesting, we're right down near zero. And if this is going to start to turn higher, this is a place that I would like to get on board. So I throw that out to you that it's all set up here, but it hasn't broken out yet. So keep watching it. I don't like the downtrend in the 200-day or the 40-week moving average. If it was to whoop-de-woo right here, and again, as I mentioned earlier, it looks like the TSX should start to follow the rest of the markets higher. If that doesn't happen, that's a bigger deal. But this chart, just sitting on a bit of a sell signal here, waiting for some signal, either a full stochastic thrust or a momentum turn here right at zero. This is all helpful. Any sort of break in relative strength, I think, would be helpful. Okay, compared to the S&P 500, we've now broken the big uptrend, and that's a bit of a problem because that starts to mean money moves away from that marijuana sector. So it makes it a little more difficult, and you can see we've got momentum under zero here. If it doesn't get all the way up and above and continues to fail, that would be a bigger problem. So just want to stay focused on those types of clues that we've got. Hasn't broken out yet, setting up there, but the odds that it goes either way is probably a 50-50 bet at this point because it's starting to underperform. Okay, the Canadian discretionary or consumer discretionary stocks in Canada trying to hold above this horizontal support and resistance level hasn't been great. PPO right at zero, but it is turned up. But you can see the last 2 weeks there's been no real volume. So last week was short a day, short some US day. So underperforming, but look at the week before, we had nothing either. And so none of these are really kind of kicking it for us. And I think after that Fed meeting, which was in that first week, that's what's starting to be a concern. If that Fed meeting is going to end up being a problem for us. Actually, it wasn't the Fed meeting, it was the G20 that was that week. So anyway, keep your eye out on that trade issue. If that's going to start creeping back into the market, we might see it here. Consumer discretionary, horizontal line right around 197.50. We're up marginally, a couple percentage points above that, but nothing to really speak about. Consumer staples have rolled over, and I think they, whatever, they can move back to their 40-week moving average or something like that. But as this starts to pull back, these things don't pay much of a dividend, most of the grocers and that kind of thing. So you probably want to just avoid this space for now. Looking at the industrials, they continue to ramp up. Hero out of Montreal has started to make a nice move. It's probably one of the better charts out there. That's HRX. Let me just put that chart up for you. This has been a quiet stock for many, many years, and then all of a sudden really started to ramp. Industrial transportation equipment. This thing's just literally been bolting out of the breakout area. So even after this dip here, I'm not sure I would have bought it just because it's been stuck at this level for 3 years. But once it starts getting up in here, this is good. That big bullish push 2 weeks ago, really helpful, but it continued to make new highs this week. So the scooter ranking could stay up here for a while. We've seen that before. Anyway, keep watching that stock, but it's doing pretty well as one of the industrials. So overall, the trend is up. The railways are still sloping up. In the U.S., the railways are just barely outperforming the S&P 500, and I don't want to see that trend change. When they start to slow, that's usually indicative of slower trade, and then that would be a bigger problem for us for many reasons. Okay, industrials on a daily basis, no real news there, just chopping for the last 2 months, but some nice movement in that Hero stock. Okay, telecom. Now we got this big giant uptrend going back 4 or 5 years in the telecom. The PPO has just broken its uptrend line and is starting to pull back. We had a bear market signal here. We now have a bull market signal up at the top here. So we would expect this to be bought on pullbacks. And you can see that this week it was trying to bounce off support. So this looks like not a bad entry. I don't like the downsloping PPO. I'd like it to get a little bit lower before you get to take a position in it. Usually, especially if we're going to break out to the upside, I wouldn't expect that people are moving to the telecom for the big move. Capped telecommunication services, so nothing is too big in the group. You can see again, got lower highs and so far a lower low and so far a lower high. We need this to take out that prior high. Metals and mining, hasn't this been tough? With the U.S. market pulling back this week, or the U.S. dollar bouncing up, it's really kind of focused the gold trade. Gold stocks held up very well considering the big move down, $20 or $25 on Friday. But the gold stocks held in there, so gold is sitting around 1,400 and everything looks okay there. I would just say it's getting hard to trade. I mean, this was such an exhaustive thrust, but this looks like wave 1, wave 2, wave 3, wave 4. Should be some sort of a wave 5 up to at least take out the prior high. I'm not a big Elliott wave technician, but in general, I think that's a pretty good impulsive move here. And it comes up and then should pull back for kind of 3 waves, and then maybe we get a better thrust September-ish. something like that. But wouldn't hurt to play the second half of this one. I don't like the fact that the momentum's already rolled over. Moving on, here's the global gold index, and you can see we've hovered up in this tight range for the last 2 weeks, but the momentum has rolled over. Again, this is when you get a high momentum wave for the first time in a long time, that's not a place to short. This should pull back and then it's a place to buy, but just because it's up high doesn't mean it's a place to short. One of my early things was to look for things with a high MACD and then try and short them. Uh, Obviously, I learned a couple of lessons there. One, don't short, and two, don't short really strong moves. And anyway, it was good to learn. I didn't put any money on it. I was just paper trading, but it was very quickly not a good signal to take. Okay, XGD breaking out to the upside here and trying to hold up there. So far this is just a bull flag and it should make another run higher. We have to watch the US dollar. If this thing rolls over, very difficult for gold to continue to push higher, especially if the yen goes lower. So no real comfort level on any of the gold trade here. If you're holding, I think that's good. Make sure your stops are in place. I'm out and I'll just slide back in when I start to see the right price action. But capped income trust, this one is jogging sideways. No real gains to be had here. Income trust index, nothing new there. Looking at the real estate, that one just keeps grinding up and to the right. Nothing wrong with that chart. Everything still looks okay. Consolidating recent gains. That's the ETF, and it's been sideways since the end of March, so nothing really to learn there. Here are the utilities, and they've pushed up to new highs. Starting to get a little bit weaker on the PPO signal. And again, if everything else was going to go bullish, it wouldn't surprise me that money would come out of here and give us a better entry into this area. Okay, just moving quickly. Oh, so the bullish percent indexes, I don't really need to cover. I'm not sure that there's a lot of information there for us. Everything has done pretty well. This one, we're getting back up to the levels I'd like to see. It's not quite there yet. A little bit stronger, but we're at the area where we had previous highs. If there's one index that doesn't look great, it's this one. When we go look at the NASDAQ 100, we're up at 83%. This is way up near the top. And when you have that much breadth, it's hard to believe that we're not going higher. And then when we have over 80% of the stocks are above their 200-day moving average, one could say, well, that's just too bullish. But the problem is they can stay above their 200-day for a long time. And again, they could chop up and down here, but we might get a 2 or 3%, 5% pullback. But usually we'd expect that a bigger pullback to be when the market can't make higher ground. Here's the New York Composite. And one of the things back in 2007, we got stuck right at this level and then started to break down here. We're well above that 50% level that we broke down. We're into the green zone here at 65%. It makes it more difficult to call, but that October period in 2015, we were way down at 40, and then we rolled down again. We're up nice and high here, so I'm having trouble finding a bear market reason. If this week pulls back, I would probably equate it to either US dollar breakout or problems on the trade front. But in general, lots of things are trying to move higher, and I think if we had a break in the bond yields, it would be the financials, and that should carry both indexes on both sides of the border to higher ground. The S&P 500, way up near the top of the range. Same thing here. Sitting right up above all of my measurements, that would be kind of a place to look for weakness. We don't have any of that going on, so this looks too bullish to be worried. Now the Canadian market, again, not quite as rosy. We're stuck below these, I'll call it average levels. I want to get up into the 65 and 70 level, and the same thing on the percentage of stocks above the 200-day. I'd really like to get some thrust. I just don't think we can do that with the oils so far behind. So as a percentage of the stock market. So here's Australia, and you can see that this breakout here to new highs is just very bullish. It's been going up every month. And here's the downsloping trend line, and it's just starting to break through that. I mean, if we were to get new 10-year highs in momentum, wouldn't that be a place to buy on? So really important chart. And I think if I just add a few months to this, or a few years to this, what you'll see here is this was the prior high, and we're right back to testing it this month. So Australia might be breaking out to new all-time highs, which I think would be even more bullish. Russia, this has broken the downtrend and continues to make higher highs, so everything looks good there. Here is Brazil, everything looks good there. And so it's really only Canada that's dragging its feet as a commodity country. And so we'll keep watching for some improvement there, but obviously there's some hurdles within. Okay, copper, we've got an upsloping trend line, and we're trying to hold this upslope. If the US dollar soars, I don't expect this trend line to hold. This would break, and I don't like a break in a 12-year price of copper. That would be a big deal. We've been trying to bounce off there, but it's that big move in the US dollar that has me worried. So the momentum couldn't be much closer to zero. It's at minus 0.426, so right at the zero level. And a turn up here is very bullish, a turn down here very bearish. So if you wanted to pick an inflection point, you pretty much could draw a circle around that one. That's danger zone one way or the other. Okay, here's copper. We didn't have a good week with the US dollar pulling back. We're stuck under the 10-week moving average. Is that 10 week or is that 10 week? We're stuck under that, so that's like the 50-day. But if this started to break down even more here, that would be problematic. And again, the price action this week wasn't particularly favorable, so we're really waiting on the outcome of the US dollar. Lumber. This one's been trying to break out. I like the fact that it's broken this downtrend, starting to turn higher. We haven't seen the lumber stocks follow on a lot yet. If we just go to the wood ETF, it's been okay, but we're right at this 40-week moving average. Want to make sure that this starts to get going, and you see the same sort of structure here where we have a downtrend line we'd like to get through. Going back to the actual lumber chart, we have the downtrend line. We're trying to get through it. We're still below zero in terms of momentum, so we need a little bit more horsepower to get it going. Full stochastic started to run, but you can see it's already making a little bit of a rollover move here, and that isn't what we want to see so close to zero. So watching a few of those leading indicators to tell us which way things want to go. Natural gas, let's just add some dimension to this chart. 15 years or something. And what we see on the chart is that we've been down here for a long time. We're at 213 recently, and this is a pretty important place to expect a low. What we got on Friday was a price move to new 4-week highs. PPO is still very negative, but hasn't even crossed its positive signal line. We do have positive on the full stochastic where the actual number is bigger than the signal number. So we've crossed above. Chart doesn't look very good yet and still looks, could stay this week for a while. What we're watching for here is some sort of a move to the upside in the lumber stocks. And again, with an easing in mortgage rates, we probably should get some follow-on by new home buyers. If that doesn't happen, that's probably a bigger issue. So keep watching that. Already talked about the 10 years, so we're going to just miss that. All of these mid caps, nothing really new there this week. Just to put a bow on the TSX at the end here, I think what we need to see is this momentum turn one more time higher. We've broken kind of this 2-year downtrend, so we have a wave here. This would be a nice place to enter, and especially if the financials catch on. If they don't, so what we'd have here is a lower high, and then it rolls down. So we'd have a divergence where price got up to the same level, and then we roll down and make a lower high here. That's the kind of thing we see at market tops. Don't want to see that. So we're really looking for this to be more like back in 2016, where all of a sudden we started to run, even though the market had pulled back. We get another kick, and perhaps the financials can provide that. Okay, so one of the areas I want to talk about a couple of things. One that I'd really like to go through are some of these other stocks. We've got roughly 20 minutes to cover it off. So why don't I jump into there? But the other thing, just big picture, was that marijuana look. And the reason I want to stay focused on the marijuana is we still have the edibles coming out in the fall. And when they show up, we should see one more surge in these marijuana names, and then I probably would want to just walk away and let the dust settle with mergers and acquisitions and all that kind of thing. We're watching to see if this can come down and start to turn higher here. Canopy growth, having Bruce Linton move out last week, that's probably something to think about. But we still got some great names. Hexochronos, ACB, Organogram, Valens Growth Works, lots of nice names to look at. I would just keep an open mind here. If this can start to run, then perhaps we start to see the upturn that we're looking for, and that would be a buy signal. Volume got really, really quiet. Last time volume got really quiet, it started to break out. So keep watching. We only had 2.5 million shares trade. Average is 15 million, so you get the idea. It's been quiet, and until it starts to really improve, that's what we're waiting for. So we need some sort of a volume thrust to kind of kick it in gear. Okay, let's go through some of the nice chart setups. This is Aptos Biosciences. Not sure if you're interested in biosciences, but I've got a range of stuff. They aren't in biosciences specifically. So this is just one. But I like the PPO starting to turn up here. We're breaking out, through this $3, $3.25 level. Chart's got lots of volatility. It could easily move up to $5 or $6 here, marking a double in a couple of months. Looking at A&W, this one with Beyond Meat Burger. We can see consolidating sideways, sitting right at the 10-week moving average. PPO has been a little strong. Perhaps just watch it for a pullback and then find your entry. But in general, the stock's been on a 2-year uptrend. That's been kind of nice. And, the scale is actually, considering it's an income trust, it actually, the bottom is almost 300% higher than, or the top is 300% higher than the bottom. So 15 to 45 or 17.50 to $51. Like, these are really nice move to the upside. What we want to see here, that this is just a consolidation and it keeps going higher. If it starts to break down, that's a problem. One of the issues at the current price is the yield is now only 4%. So just be aware of that potential for a problem there. I like this Brookfield Global Infrastructure. This yield is up around 9%. Stock is just breaking out to new 3 or 4 year highs, and pushing up with that kind of a yield is a nice place. You might get a little bit of a pullback in here, but again, I think with that yield, it's going to be well supported. Blockchain technology. So this is an IPO, an ETF that's come out, and it's made a low, a high, a higher low, and now is trying to push back up and make a higher high. PPO is turning up right above zero. This is pretty nice, like the shape of this chart. And again, if technology was going to keep running, this should do it. If not, it'll roll over and you'll be out quickly. Ballard Power. This chart is really interesting. So we had a big run up a couple of years ago. We've consolidated for 18 months, and now looks like we're getting set for new 52-week highs. And if we start to break out here, obviously they've got something going in their technology department that's starting to kick in. And then here's BMO, and what you see here is chart trying to get through the 10-week, sitting on the 40-week. Full stochastic has given us a buy signal. If the PPO can turn up above zero here, pretty bullish place on the chart to get involved. This is Brookfield Select Opportunities Income. This thing pays a 16% yield, crazy big. But what's nice is the full stochastic bouncing up here. PPO is just starting to turn up above zero, so you can see that it is the data is still below the signal line by this amount, 0.00 or 0.029. Wouldn't take much to trigger an up on this. And again, if it turns up above zero, usually that's a very nice place to get on board. Want to see that? Obviously, there's a big 2 or 3 year downtrend here. Any sort of a break to the upside, and I think that would come in as very bullish. Okay, Canadian convertibles, income fund. What you see here is it's sitting on support at 440. What we're watching for is start to get a momentum turn to the upside here. Full stochastic is trying to get going, but this thing pays a 13% yield, just paid it out last week. So watching to see if it can hold this base in any sort of an up move, I'd probably want to participate. Chemtrade Logistics Fund. This one actually started to move this week and made a nice big breakout. Still based on the current price, it pays an 11.75% yield. And my thoughts on these yield plays again. This one's paying roughly a percentage point a month, but you're just starting to get movement again. It's been basing for 3 or 4 months here, so perhaps this actually has some time to get rolling. And if not, I'd just get out relatively quick. Chorus Aviation, this one is starting to move through to new 52-week highs. That's bullish. Turning up here with a PPO above 0. That's just kind of exactly where we'd like it. Scooter ranking suggests it's one of the top performing stocks. So I like the shape of the chart, and it looks like it's ready to run a little bit more. Another name in the aviation space is Cargojet. Air Canada's already broken out, by the way, so that's another one you could look at. I did write an article on Don't Ignore This Chart, or maybe it was on the Canadian Technician, about Air Canada. And one of the things I have a concern about, the stock's already up 500% in a couple of years, whereas the aviation industry is flat. Whenever I see an anomaly like that, I really have trouble continuing to put more money to work in there. It just seems odd that either the competition can't figure out how great Air Canada is. That would seem odd to me. The second thing would be, why all of a sudden this big wild spurt, and what are they actually doing that's different? And, I have a few concerns around it. Anyway, for me, I'd be cautious on Air Canada. Go ahead and buy it until the stock starts to break down. But there's a lot of issues there for me when they're up 500% in 3 years and the rest of the airlines are flat. Here's Chorus Aviation. Obviously, this one's been behaving well too. It's been sitting in this basing pattern for 1 year and it looks like it's ready to start to turn up. So perhaps there's a little bit more meat on that bone. CWeb, this one is marijuana related, but starting to move back up above its 10-week moving average, so that's a bullish sign. Dream Industrial REIT, this one has been living in the top right-hand corner. The one concern I have here is the momentum is quite high and might need more time to pull back. So this one isn't my first pick. It has a low yield relative to some of the other ones I'll present. But I think the bigger area here, this continues to hold the 10-week moving average, and as long as that's the case, probably want to own it. So nothing wrong with it, that's for sure. And I think industrial REITs are probably the better part of the market. Here's BRP, the recreational products division, and this is starting to run again. And again, when we saw this move above its 40-week moving average, it was a nice long run. This has just started, so I like that. PPO above 0, full stochastic starting to run. Scooter ranking up nice. First time in a while. I think it's a good chart. Global Real Estate Investment Fund. This one's got a table set here at $14. Looks like it wants to break out for some fine dining. So that would be nice. 5.73% yield. And it's a global one. Again, nice upsloping chart. Paused for a year. Now looks like it's ready to turn on the jets again. This dream chart started to break out this week. This was brought to me by a friend, Dwight. On this chart, you can see the full stochastic starting to turn up. PPO just starting to turn up around 0. No yield here, just to make sure everybody's aware of that. So the problem I have is with this big base, it doesn't pay much of a yield, but obviously it can move quite quickly. From 7 to 10 would be a 30% gainer like it did in 2018, and then it gave it all back. So it's obviously a trading stock, but to me, everything is set up right here on the right-hand side for a little bit of a move. Wouldn't be my first choice out of the ones I'm presenting today, though. ECN, this one, a little bit of a financial company, consolidating sideways here for 3 or 4 months as it tries to get through this 430 level. It just started to turn up again this week. Now, the PPO is nice and high, but it's pulled back for a few months. If it can keep going, so if it can start to turn here, a full stochastic bounce at 50 is very bullish. So I'd want to get on board this. You can see the scooter ranking is up in the 90 level. Extended care. This one is breaking out to new 52-week highs, pays a 6%, 5.5% yield. Scooter ranking nice and strong, living in the top corner, and momentum is uptrending, so nothing wrong with the chart. I usually like to buy the momentum dipping and starting to turn up. I know that's harder for some people to do, but if you're not a value investor, you like to buy breakouts. This one's a breakout buy. Fire and Technology Group. This is in, IT, information technology sort of play. And you can just see it's gone sideways here for a few months. In general, the chart had big growth, pulled back, now started to rally, coming back down near the 40-week moving average. I think it's a great place to watch the chart. The scooter ranking still suggests paying attention, but it's been struggling sideways for 3 or 4 months. That either means somebody big is taking a position and just slowly working their way in, or the chart just doesn't have any upside momentum and is going to start to fail here. GMP Capital, another financial one. This chart's just starting to turn up. I like the PPO making a higher low, now moving above zero for the second time. This looks like it's ready to click higher. Scooter ranking up around 75. So I don't like the big long downtrend. I'm hoping that this is a change in trend. HCG, this home capital, this is just starting to move to new 2-year highs. Warren Buffett made his investment back in here. Anyway, stock hasn't done much for 2 years, but the scale gets pretty compressed in here, 5 to 20. Breakout above this $20 level, it just keeps running. I think you want to own that kind of thing. And no yield on that. HFU, this is the 2 times financial bull. The only reason I want to show you this chart is because it's all set up here with the full stochastic turning up. You're trying to break through prior highs, and the PPO momentum has pulled back and is just barely, just a hair away from turning back up positive on the weekly chart. So again, if these yields are going to change, this would be the kind of place I'd expect to see the turn. And again, a breakout to new highs here I think would be quite bullish. This is just another way to look at an ETF for the banks, but obviously a faster moving one. Intact Financial, this chart's up and to the right. What's not to like? Just keeps climbing. Income Financial Trust. This one is exactly the opposite of Intact. We are drilling down near the bottom. We are back near the December 2018 lows. And as we get down here, notice how this pullback on the PPO is. If we could just get any sort of a lift here, this thing pays out a 13 or 14% yield. And you can see for years it was a beautiful uptrend. So the management's been under pressure for about 1.5 years if they can't right the ship about now as it goes to prior support. To me, this is an interesting place to get involved in this stock. I'd wait for a signal, that's for sure, because they could just keep dropping. This Maxar Technologies has been brutal, 60 to 6, and now starting to turn back up. It's at new 6-month highs, so maybe they finally got things back together, and management obviously had a little bit of pressure on them with an 80% drop, or 90% drop. So with all of that, this looks like it's starting to run. Might be an interesting place to take a buy. Manulife Financial, this stock's setting the table here again for fine dining. Hopefully this starts to break out to the upside, and all of the insurance and bankers look set up with the same trade, so I like that. Neptune Technologies, this one's marijuana, trying to break out to new highs. If it rolls over here and goes negative again, I think that's a concern, but in general, these names just look good. Premium Brand Holdings, this one's just starting to turn back up, 6-month highs, PPO back above zero, the scooter ranking back up into the top zone where it was for 3 or 4 years. So to me, it looks like it's just getting started on the big long run. Pivot Technology Solutions, another little IT company here, trying to get going. It's about 9-month highs. It's only $1 stock, but trying to get going. Scooter rankings up near the top of the range. Any sort of a breakout here might help, but you can see the chart has some wild moves in it both directions. Restaurant Brands has been traveling sideways for 3 or 4 months. PPO has rolled over. If you're looking for an entry in this stock, it's harder for me to buy this as the PPO is pulling back. I'd at least want to start to see the PPO at least make some sort of a basing effort and some turn up. That would help me. This stock, Quarter Hill, the only reason I bring it up is momentum is just heading back up above zero. Had a big strong week last week, and it seems like it wants to start to go higher. And then here we have the full stochastic, and on the full stochastic, a bounce on this 50. That's a pretty bullish place. Nowhere else on this stock has it done that. I guess this was a bit of one, but this looks to me like it's trying to actually finally make a base. And if it could start to run up, it's obviously broken this big downtrend line for the last 18 months or 2 years. All of that says to me, at least think about it and put your stop relatively close. If it doesn't hold, let somebody else own it. Okay, TransAlta Renewables. This one's pushing up to new highs here. Has taken out this $14 level. So nice and bullish when you're hitting new highs. That's not a bear market. This one's got a 6% yield. Scooter ranking up over 75, so I like it. Full stochastic is just kind of winding sideways here. PPO is pulling back any sort of an upturn here, and I think I probably want to get more involved. Richard's Packaging Fund, this one just keeps working its way higher. The Scooter ranking just got back up into the 75. It can stay up here for a while. The chart looks good, just nothing to complain about, and it's got a 3% yield. Royal Bank, this one is trying to push to new all-time highs. It wouldn't take much. It just needs to get through 107, and it's at 105. It's got the bullish bounce sitting right here. I like it, and again, the financials could really start to rock. Maybe I should go back one chart here. The point I want to make here is back in 2016, we had the same sort of thing where we had this base. We broke out, we pulled back, got the 50 scooter bounce, and then went on. And this was the big run in the stock, 72 to 92. So perhaps they're just about setting up for that because it's been sideways for a year and a half or two, much like it was back in here. And then once it got going, it really got going. Okay, obviously I typed in a symbol wrong. Skylon Growth and Income Trust. This one is trying to break out through this tabletop. I noticed the volume here. This was interesting. All of a sudden, somebody showing up for work. PPO getting ready to turn up in this just as it looks like it wants to start breaking through highs, and a full stochastic signal turning it up. So that chart looks nice to me. SLF, Sun Life Financial, just about to break out to more new highs here, so that's very bullish. I think you just got to like that chart. Same thing for Manulife. They both just look good. TD doing the same thing here, trying to get through that 77.80. What did we close at? 77.65, and the high was 77.96. So we did make new highs this week. Again, I think the banks are ready to run. Tech Leaders Income Fund. This one's just starting to push to new highs here, so another nice place on the chart. And you can see the ETF itself does very, very well here for long periods of time. So we're just starting to get going. This could have a lot more run. TRL, Trilogy International Partners, again, making new 9-month highs, trying to get going out of this base. This is obviously an ugly stock falling. I'm not that keen on it, but it did start to show up on some of the things, and perhaps it can finally make a move to the upside. I do like the fact that it's in technology and telecom, so hopefully it can make a bullish push. Viamed Healthcare, this one broke out to a new high and looks like it just wants to roll over and pull back a little bit. I think I'd let that happen and hopefully potentially look for it down around the $7 level instead. And I think for our last stock, it is the TMX Group, the owner of the Toronto Stock Exchange. And what we see here is it's been trading in a very tight range for 6 or 8 weeks, started to push up to higher highs again this week. And with that, the stock's, it's a great performer to begin with. As the stock is starting to move to the upside here, the scooter ranking keeps going. Nothing wrong with the chart overall. We'd like to finally see it break through this 2018 level, and it's just starting to do that. So it looks like it's a nice place to get involved. Okay, so that's a wrap for the show this week. What I do want to say is thanks as always for following. continue to be a little worried about the oil and gold setup. Watch the US dollar hard, and marijuana not yet, but watching, and financials look good. So thanks for joining me. Bye bye.